Okay, according to this web page, we are live. Good evening, everyone, on this fine Friday evening, morning, afternoon. You know, time zones are a thing. So I have no idea what time it is for you, but any signs of life in the chat would be fantastic. We'll run through our intros and then let Lumi take it away. Scar says, hello, Flary Roider. Oh my god, that is not an easy name. Says, oi, we live. Apparently I'm looking like a snack. Maybe that webcam thing is actually on, Duck. I don't know. Okay, no, it seems like we're all working and well. So, before we introduce our first recurring guest, there's a privilege for you, Loomdart. Thank you to Bybit for sponsoring Technical Roundup, the newsletter, as well as the YouTube channel. Their links are in the description below. Be sure to check them out. And a big up for them for supporting us and allowing us to make and facilitating us to make all sorts of content for you to read, watch, and consume in whatever way you see fit. The newsletter, the link to which is available in the description, is also free. Go sign up while we are rambling on about the introductions. And the final thing is, if you enjoy Technical Roundup, Casual Friday, anything we've got to offer at all, ever, at any point, make sure to hit the like button and subscribe to the channel and help us wage war against the YouTube algorithm before we get inevitably suspended, because that seems to be the natural conclusion of every crypto YouTube channel. So if we can kind of go out with a bang, we'd be quite happy. But with me, I have got the Duck, as ever, whose health has been worrying me recently. There you go, leaks immediately. And then Loomdart as our guest as well. Gentlemen, how are we doing?
Good. How are you?
Yeah, Loomdart?
We are doing great, my sirs.
We're doing great. Nice. Okay, fantastic. As you can see in the title, I came up with a whole lot of clickbait nonsense that is supposed to be interesting, but perhaps we've got nothing of interest to say about those topics. But as it is Casual Friday, we can just kind of veer off and talk about influencer NFTs if you want. So, the world's your oyster. But I suppose just to kind of ground us a little bit, you've been bull posting a fair bit, Loom. And even recently, I think your most recent tweet before going online is about feeling a deja vu about maybe missing the next spike up. Do you want to give the people some sauce? Because all they have to deal with is, Donald being the most reluctant bull in the world. And then me being like, if it goes up, it'll go higher. If it goes down, it'll go lower. Thanks for watching me explain that for an hour. So maybe some sobering analysis will be extremely helpful.
I'm here to defend Donald's honor. When we were at 10k on the first time we hit there, it was blood on the streets. But my man Donald was like, "Hey Loomdart, you see this price action? I think this might go 10.5." He gave me the hope.
Yeah, he's the ballsiest bull you'll ever meet.
Yeah, a grand $500 bull.
I think I had a tweet like that where it was either 11k or 12k or something, and I said that for the breakout for the first trouble area would be like whatever $300-400 higher, and then I got all the comments like, haha, lol, so ambitious, $400 higher, and then it reached target, and that was the top, and then it just nuked completely. So I don't know. Sometimes you have to be a bit more conservative when you start approaching weird prices. I know the Duck just feels really strange about Bitcoin whenever it gets into sort of 10k plus. Don't know what it is about that specifically. How about you, Lim? What are you feeling?
Well, I mean, every time, not now, but before, every time it'd go above 10k and then dump, I just get this feeling of gosh, I really wish I sold above 10k. I mean, technically, it's not it's an interesting thing because technically there's not really much there, but
above
it's
10K.
More emotional wise. Yeah, it's most of the levels are near 9.8 and 10.2s for me anyway.
Mm-hmm. And so what? It's clear skies above then. It's anyone's guess sort of thing.
Yeah, and it's if we go above 10k, then it's damn, that was really the last time to buy below 10k. And if we go below 10k, it's damn, that was really the last time to sell above 10k.
That's true. I kind of every time we go to 10k, the market or in general sentiment goes crazy, and I think this is the first time that we've had in Bitcoin history where we've traded above 10k and it's not been too crazy. So that's like one thing to watch, I think.
It's because
like,
Hodl isn't
yeah.
mass tweeting. That's what it is.
I've had to mute him. Otherwise, I get too bearish on Bitcoin.
Loom, do you have a chart you can quickly give us some context with, so we can kind of have that in the back of our minds with where Bitcoin is for you and kind of what to look out for?
Let me see. If I get on that screen.
Close all those tabs.
I've just got to close my 50 alt accounts. Actually, I can do a Chrome tab. Oh, sweet.
You can do a Chrome tab.
That's pretty cool. Google really thought of everything.
We're about to get a Loomdart chart. Brace yourselves. Oh wow, that's pretty.
There we go. Now it's if these lines were horizontals, there'd be like 6 horizontal lines on the screen, and people are like, "Whoa, nice clean chart, mate." But it's the fact they're like diagonal. Sorry. Anyways, I just want to give a really brief, quick shout out to Jack's Square Bitcoin purchase, which helped break us out of this. He tweeted like right there. This guy must be at least doing some form of TA.
Yeah, I was gonna say it's like Twitter hiring technical analysts to time their bloody Bitcoin purchases via Square. That would be something. Do you believe there's any truth in that? Because I mean, that's kind of a casual Friday type of topic. Where recently with Bitcoin's dumps and stuff, you get a bunch of usually hindsight analysis being like, oh, like this was deliberately released at this time, which is the kind of conservative version, or the slightly more extreme version of, oh, the charts were telling us of this news beforehand, and this is just that playing out. What's your kind of view on news, technicals, and maybe coincidences?
I think for like, there's really 2 ways to answer it. The first is like, if it's regarding altcoins.
Mm-hmm.
Since like they're smaller, more niche markets with more kind of hands-on participants, usually, yeah, like the devs wait for generally bullish market scenarios to release updates and stuff.
Mm-hmm.
But I think the thing you've got to remember with a chart is it can look like a chart can go infinite ways till it goes one way. So it's very easy to be like, oh yeah, it did this because it did that because of the news. But like it could have done literally infinite other things.
Yeah, I mean,
so it's quite hindsighty.
Yeah, that's the issue. No one really takes the short and then says there and then that I'm assuming some fudder's gonna come out, right? Like if it comes out, it conveniently adds to the idea, or whatever, or
And it's also a thing where like the wrong trades usually don't announce themselves afterwards. Or they come with like a 5-thread post about how you've got to be upfront about your losers and just
risk was managed, regrets were handled, all that stuff.
But that is a really good point actually, where you see like on Twitter how it feels like everyone is always right, but there's so many people on Twitter and obviously people don't like to talk about their losing trades. So you always get like people parading their winning trades, and then everyone seems to be winning, but that's not the case most of the time anyway.
Yeah, it's like you say all these Robin Hooders made like 10x their accounts on Tesla, but like their total assets are like maybe 5 million. And then you've got these funds blowing literal billions trying to short it. So it's very like, it's nice coffee table talk, but like when you're trying to be serious, there's much more how do I word this? Like there's bigger things at play sometimes.
So for you,
but anyways, the Bitcoin TA.
Yeah.
As you can see here, I have no technical analysis here.
Nice.
Apart from like, I've got it on my Coinbase chart, but not this one. Kind of like here-ish.
Sure.
So I guess just there. Which I think that's like pretty clear, like support into resistance. But no major levels.
How do you actually trade? Like either on lower time frames, higher time frames? Do you like hold a position? Do you just trade the range and forget? Give less weight to the higher time frame context? Because for me, for example, it's the opposite. I use price action at levels kind of build a picture, and it gives me a bunch of context to work with. But if price is kind of in the middle of nowhere, I mean, unless that's fine when it's moved from like it's moving between levels, so that's kind of context in itself. But when you're dealing with big kind of high time frame gaps, do you just presume kind of continuation in the direction of the break, or how do you contextualize the market?
It's a mix of things. Like usually Bitcoin likes to range, so I kind of it's like I'll sell when I feel like it's kind of high. It is weird, but like it's kind of
yeah, I love that.
It's very tricky. So it's why I did that tweet. Like with my style of trading, where I basically go for like the big swings, I also scalp in between, but like it's kind of risky in that it goes against my original kind of trade plan, but I just kind of hope that I can get back in cheaper.
Nice.
So it's a bit kind of like rolling the dice. The thing is though, like the reward for it's pretty high.
Yeah,
in the say like you.
Because I remember when we talked, like you were like never below 10K again, and then we didn't go below 10K. But you've closed that position several times, right?
Yes.
And then reopened it.
Oh, I got so lucky the first time. Honestly, the fact we're European is amazing.
Yeah, we've missed
like
out
you wake up, you're like, oh, Bitcoin's down $500 today. I wonder what happened.
What's your view on this news? Because a lot of it was people were providing commentary on the news that was coming out, but for you, kind of looking at the chart, your understanding or your argument was that a lot of the informed flow had already positioned, and then the final leg of the sell-off was kind of the later movers who ended up being underwater. So kind of how do you navigate either this event specifically or just stuff like that?
So basically, there was that pretty Chad post by I think FX researcher or someone about how Starzu's step counter was 0, and apparently in China they just have everyone's step counters publicly available.
Isn't that crazy?
That is wild.
Oh fuck! I haven't even heard about that one. So he analyzed that shit based on that.
I mean, it was just like this guy hasn't taken any steps today, and so they were just like, well, it means either like his phone's been off the whole day, which is like for a cryptocurrency exchange guy, that's quite rare, or the police had taken his phone, like he was in custody.
Oh, that's genius.
Yeah, and like I'm in like a few groups, and they were all pretty sure that it was him that had been arrested. So that aspect of it was like clear. And then I think Cakesin, or sorry, I'm butchering the pronunciation.
I think it's a sure sound if I had to guess. But yeah, go on.
But yeah, the leg from like 11.3 to 11.200 was them announcing that it was Star who'd been arrested.
Mm-hmm.
And so at that point, it's like, well, everyone I know knew that it was Star who'd been arrested, and suddenly we're selling off on the news that it was Star that had been arrested. So you can just kind of assume that like the people selling now are either like very reactive or just
late,
not really or just late. Yeah.
Do you give any weight to and I want to hear your view on this as well, Doug. There's an argument floating around, and based on the price and fundamentals, whatever, that we've had news after bad news after bad news. FCA, BitMEX, OKEx, everything you can come up with, and yet still price isn't dumping and it's being resilient and even breaking higher, etc. Do you ever give weight to stuff like that, like a market not dying off of bad news means a certain market, or not reacting to good news also means something for the trend? How do you conceptualize these things, if at all? Because I don't know, I feel like you can really start cherry picking as to how the market reacts to certain news and building a picture off of that. But at the same time, if you get these things, they become quite hard to ignore if you get a lot of instances of what would typically make the market take a shit, and they fail to do so. But at the same time, we're trading a market where kind of China banned bullish and all of that sort of stuff. So how do you navigate these, or how do you interpret these news events?
Well, 10K, like in the 10K range where we had was there any bad news beforehand? There was some was there anything before the BitMEX stuff, or am I just?
Gosh, I'm sure our chat could tell us if there's anything. I have a feeling there might be. But is it the KuCoin? Was that the?
Yeah.
Oh yeah, there was the KuCoin
There we
hack,
are,
I
okay.
guess. Oh, that was such a mess, but we could talk about that in a bit. So, I think at 10K, I started thinking to myself how like derivatives platforms as a whole like have much less of an impact on the Bitcoin price than they once did,
Mm-hmm.
at least in my feelings. And it's like I don't really think like if you've held like a core spot Bitcoin position over like the last few years, nothing is ever going to make you sell. And then well, obviously the crazy stuff that's been happening in the legacy markets recently is also like another indication that people just aren't going to sell their spot Bitcoin. And I think that was kind of further cemented in by how when we got bad news, there'd be like a bit of selling on derivatives, but like the price wouldn't really nuke much.
Mm-hmm.
Basically, like everything being consolidated right now, right? That's what you're saying. As in, the people that have it don't want to get rid of it, and I mean, the people that don't have it maybe try to sell it down by using derivatives, but
yeah, that's a big part of it as well. I think like most selling was off of derivatives platforms, which is like usually kind of a bullish sign. Actually, I'll talk about that later.
Oh, what do you want to mention?
You know, I guess I was going to talk about like the whole SPX correlation stuff.
Oh, sure, man. I mean, look, it's Casual Friday. If you want to jump from theme to theme with more than this is the day to do it. Because that's kind of died off the radar as well, right? The whole notion of the dollar, and then
that was beautiful. Basically, with the whole kind of that type of thing, markets don't just correlate. Like there's someone trading it. Like for the price to go down, someone has to sell.
There we go, guys. Don't say we never taught you anything on this channel. God damn it.
And like, I've only ever really noticed us start to really heavily correlate with the SPX at kind of like weeks before major breakouts. Like we'll start correlating, and then the price will kind of consolidate in a range, and then break upwards.
People are asking for your SPX chart as well, Lumi, since you're still on screen share.
I'll send that in a bit. But so my kind of argument was that like obviously someone is doing like people are doing this correlation, and they're usually you'd have open interest build up as we correlate, which means they're kind of getting into bigger and bigger positions. And well, my bull thesis from then is like we usually mostly correlate with the SPX when the SPX goes down.
Right.
And so it's like, well, these guys who are trading Bitcoin with the SPX are probably short. And judging by the open interest increase, they're probably building into bigger and bigger shorts. And so usually with that many shorts, it's like, I expect these guys to get squeezed when the price goes up.
Do you see increases or decreases in the correlation as kind of macro signals in any way? Like you had that tweet about kind of BSV, and when things get really tight, it's often an indicator of something.
I usually I'll get bullish whenever we start to really closely correlate with the SPX.
Mm-hmm.
Just because, I mean, one, it's usually a sign of what I said before. Like some guys are probably shorting into it and they're ready to be squeezed. And two, like the SPX only goes up.
Yeah, I mean,
apart from for brief periods where it goes down really fast.
Yeah, it's just kind of a choppy grind up, and then you get like small nukes where then Sven will draw like a rising wedge with a target of 0, and then it'll just kind of make its way back up. I remember there was a bunch of selling, or supposed alleged selling of like Dow, SPX, whatever you want, just US equities on the way up. Right? Like all the crypto, not all, I mean, look, I'm generalizing because it's Friday, whatever. You had just a bunch of like crypto technical traders selling supposedly, or at least charting the bearish
It's
retest
always
in SPX.
so it's like they have zero exposure on the way up.
Yeah.
Yeah, it goes down, and suddenly it's like I want to short the American economy. Like, I feel like if you're going to get in that position, you should at least have longed some for the way up.
Yeah, but
And
you just call it. Isn't the trick to just call it a hedge if it conveniently kind of keeps going against you?
The beauty. And then when when it hits the top, you're like, oh no, my portfolio is mainly stocks, of course. Oh, that was such a beautiful moment. But it literally, I think it dumped 20% after.
Yeah.
Which,
I can't even talk about it. Otherwise,
Yeah, Don with the muted mic.
Anyways,
You got an SPX chart for us with where we are now? 'Cause you supposedly
it's-
bought but sold the top. What
Oh,
happened?
that was-
You meant to sell, but you
like,
bought,
full
right?
disclosure, so I can't even like say which platform I use because I hate it so much, and like I'm pretty sure they're gonna just disappear. one
Terminate
day.
your account.
So I'm not saying anything, but yeah, I thought I'd longed, shorted literally the Pico top, like that white line.
Sure.
But it turns out I placed the order at like below price, so it was like a market sell. But there's like a little ticker thing on the top right that I completely missed because it was a mobile app that you switch from long to short, and I had it set to long.
Oh.
Obviously, long's default.
So they're not even different colored buttons to kind of guide you.
No,
Oh, wow.
at least I don't think so. They may be, but
So how do you? I mean,
Yeah.
looking at the chart now, what did you do with that position?
no, I sold it at like 20, the 35.20s and flipped.
Okay.
Just because I'm not like whenever you make a mistake like that, you never just let it run.
yeah, that's
Like
the
you
worst
just
thing you can do.
instantly close it, just always, because it's a trade that you never meant to start, so it can literally only go wrong. Because
Yeah,
if
even
you
it
make
goes
money,
right, you know.
yeah, if it goes right, you're like, well, I just gambled. I may as well go to the casino.
Yeah, but do you want to be right or do you want to make money?
Wait, where's that resistance I drew? It's like 3504, it's like 3500s. Yeah. So I closed off my shorts in the 3450 range, and then I had this rectangle as like a support resistance flip, and then the price violated my rectangle.
Sorry to hear
Poor
about
rectangle.
that. Yeah. Do you have a kind of? Do you trade this just on a scalp kind of legacy as a meme, easy, whatever tweet style basis, or do you have like a higher time frame thesis
I'm
in mind, or?
I think that it's like the next few weeks are just going to be like insane agony for like just traders in general for stocks, just because of like how much uncertainty there is with the elections. Now, even when the elections are over, they probably won't be over.
There's a good thing to talk about too. Do you think Trump's gonna be bullish or bearish? Like, what do you think like is gonna happen whether like Trump or Biden wins?
So, like, I don't think it matters. I think the only possible difference is Biden may give like a bit more money to poor people. But
Yeah.
apart from that, like, it will just stay the same. Like, as long as rich people don't have other places to funnel their money into, they'll just stick to piling into stocks.
It's hard to
Yeah,
disagree. I think on the question of stimulus as well, even if, you know, regardless of who wins, that we will
I
have
muted
another
the word
leg.
stimulus on Twitter. It's
Yeah,
just
fair
agony.
enough.
Like, it's coming. It doesn't matter
That's
when
what I
or
mean.
where it's
yeah,
coming.
yeah, for sure. So I think they think it really matters too much in that regard. I think all the macro whatever analysts are just going to keep saying the words uncertainty until just something trends or something's obvious, and then, you know, figure it out by that point. But I largely agree. I can't see it mattering too much. Like, you know, it's not like it's going to do or die depending on which old white dude gets elected. You know, I just find that quite unlikely.
Yeah. But no, I'd say like positioning wise, I'm short the SPX personally. Can I say that? I mean, it's a CFD. But yeah, I'm
Going
not a
to
fan of
jail.
America here. There we go. Because
Great.
I think like this whole rally was kind of like a dead cat bounce, really, and we need to go a bit lower.
We need to.
Right.
What do you mean we need to, Loom?
Right. So the reason I shorted 35.46 was, well, the reason I longed but thought I shorted
Yeah.
was because our good old friend Donald Trump started brag tweeting about how stocks were up so much.
Oh, I know those tweets.
Like,
Yeah.
this sounds dumb, but like when the market has no fundamentals or anything to rely on anymore, you've just got to trade based off of like people's emotions and sentiment.
Do you do
So,
that for crypto at all?
um,
Do you have like
I
counters, or do you believe in counters generally?
I think the concept of counters is kind of like hit and miss. Like you need to know when to use counters. So if I think like the market's going to be super choppy, I'll probably be a bit more kind of focused on like my Twitter feeds to see who usually is kind of bullish at resistance and bearish at support. But I think like the concept of counters, like it depends entirely on what type of market stage you're at.
Scar says, "What about inverse Gainsy bot?"
Oh, that must suck so bad. Poor Gainsy. It's not
Cobain's
really his
just
fault, right?
weird. I mean, Gainsy's had some really killer bots.
Yeah.
But it's just like the way the bots work. Like when it rains, it pours.
Yeah, I mean
There we go, that's a nice
they're
quote.
made to
Loomdart.
they're made to catch like trending moves, right? And if it's not trending, they're gonna get chopped. But
It's like if you were to tweet about a trading strategy that's guaranteed 80% win rate, people will be sad on the 20% of the time it doesn't win.
Mm-hmm.
Yeah.
Even though it's like you need to suffer the 20% to get the 80%. But like it's this whole kind of viewpoint of, oh no, I can't lose, I need to win.
Yeah, as long as you can kind of eat the chop, right? Or not have your account eaten by the chop. If you have a trend-based system, it's like kind of sort of the best you can do. I think it's wise that he doesn't, as he said, normally doesn't just manually intervene and make a discretionary assessment as to whether the conditions are trending or dropping. He just kind of lets it be, and for it to, you know, push around and back and forth when the conditions aren't great, but to completely ensure if and when they do change, he can't really blame himself for like turning the bot off and then not turning it back on in time. You know, it's hard to disagree with that logic for me.
Yeah, but I think he's done some stuff where like he'll put his bots onto certain trending markets, and then like it performed well. Now this sounds like an advertisement for gains. But like there's been some good ones.
I mean, I'd argue like determining like whether a market is actually trending or chopping is like a huge part of trading, right? Because if you know that the market is trending, like that's half of it done right there, right? Because you know,
can you nuke your screen share, by the way? Sorry.
Yeah, because if you know it's trending, you know what to do, right? You're looking for dips to buy or for rallies to sell. But like determining that fact isn't really easy because I mean you can be trending on one time frame, chopping on the other, that kind of stuff.
Yes, the eternal question, right? There's actually a really good article on this FX website which completely escapes me, but it's kind of like how do you determine a trend? And it goes into all the different ways that people use kind of market structure, trend lines, certain moving averages, this, that, etc. And it just shows that, and also different time frames. And you know, the conclusion of the article was that it's really difficult to actually decisively or conclusively or perhaps just usefully ascertain when instrument is kind of trending or not. It just really depends, or at the very least, identifying when the trend shift has happened, right? There's that good old Ichimoku meme, if anyone remembers, where it's like you've got this checklist about, okay, the cloud needs to do this, and the, you know, this TK cross needs to happen, the lagging span, and by the time you've got all of them, the thing is up like 2000% when you get your uptrend confirmation signal. So there's like a timeliness element to it as well. Not easy at all. It's always nice when you don't have. Hold on, there's a comment. It's always nice you don't have to ask, can I buy this dip without getting wrecked? Yeah. I don't know. I think even if you do have a read on the trend, positioning for it is like another thing entirely. You can get pretty beaten up doing that.
Yeah, and apparently you can actually long when you try to short.
Only if you're Loomdart.
That was one time, right? Stop the abuse. Indicators I use. I'm guessing that was directed towards me because it's my chart. But no, I just have so all of my these two indicators I have are based off of the funding rates. Just because I think like funding rates are the one thing that can't really be altered or adjusted by like with most indicators they go through this cycle where like you use the indicator for a while, you're like, wow, this is pretty cool, and then the indicator gets pretty popular, you see lots more people use it, you'll notice like it's kind of it doesn't stop working, but like you have too many people kind of anticipating it and like working with it and stuff. Well, stuff like funding is just, it doesn't matter if literally everyone were to monitor funding, it wouldn't change the fact that funding can provide alpha.
Yeah.
Doug, what are your views on funding? Do you use it? Has it ever taken you out of a trade or put you in one where you kind of had doubts? Or just a confluence factor?
I mean, yes, for confluence, it's really good. In general, I mean, I've been looking for, like, whenever you get, like, negative funding, like, for example, the fact that I closed, or, like, the reason for closing at 10K or, like, in the 10K area, when I shorted, like, from 12K to 10K and then saw price go up, like, $300 and I was like, okay, shit, this could actually go higher, was mainly because of funding. Because I saw, okay, there's a lot of people that actually turned bearish. There's a lot of people that are overexposing themselves by just shorting support in the 10Ks. And then you get paid to be long. And I mean, whenever that happens, when you get paid too long, there has to be something enormously wrong, or the people just get fucked. Like the short people just get fucked, because like there wasn't really anything terribly wrong with the chart or with Bitcoin at 10K, right? And then you have a lot of people just shorting into support, paying for the privilege to short. And then, I mean, that's just a recipe for disaster if you're one of them, right? So I was like, yeah, I'm seeing that. That's as good of a reason as you're going to get, even more so when it's into one of the better support levels. So that's why I closed. So yeah, I do use it as well. I think it's pretty good.
And yeah, something I'd add to that is like also markets consist of people trading. And so if the price is at a point where derivatives platforms are literally trading below spot platforms, it's a pretty good indication that lots of people are selling.
Yeah, and I mean, so like, it's selling on derivatives, right? It's not spot selling. There's a huge difference. Yeah.
Sorry. It opens up for squeezes.
Gavin is asking, what indicator is this funding? Maybe for someone who's not fully aware or doesn't use it, do you want to give the explain like I'm 5 version of what funding is? We've talked about some of the potential, like when to pay attention, how it can be significant. But if someone doesn't know how it's calculated or what role it serves, like why we have it, like why am I paying to get long or short on derivatives?
Okay, so there is a contract called the Perpetual, which you've seen on BitMEX and Bybit, or sorry, on Bybit and BitMEX and Deribit. And basically, before you just had futures markets, which would, so let's say there's a futures market that settles in 4 months. From today to the end of those 4 months, there's nothing that says that the price has to be anything, apart from the fact that on the end, at the end of the 4 months, that futures market will settle at the price it was set at. So let's say there's a futures market for 1 Bitcoin. In 4 months, you know that market will close for the price of 1 Bitcoin. But it can do literally anything from here to the end of those 4 months. And then obviously with futures, you have to kind of, so let's say you have a long on futures, those 4 months are up, you have to roll your position onto a new contract, which is like, I think tax-wise, that's a big burden. So they came up with a contract called the Perpetual, which works very much like a futures, apart from there's no settlement date, so the contract never expires. But the issue with that is, instead of knowing that in 4 months this will be equal to 1 Bitcoin, there's zero, like, you don't know what the contract will be equal or worth. Sorry. And so what they do is, there's an index price of Bitcoin, which is Coinbase, Bitstamp, where they take all the prices together and then make an average. And to keep the price of the Perpetual trading with the price of the average on spot, like Coinbase and Bitstamp, there's usually once every 8 hours, it will do a calculation based off of how far the Perpetual contract's price is away from the spot price. So say how far BitMEX is from Coinbase.
Mm-hmm.
And then if I think with BitMEX, there's like actually I won't get into that part, it's a bit technical, but basically if the price gets too much above, people who are long will start having to pay a funding fee, which is like a small incentive to kind of like stop longing so hard, sell, so the price gets back into the mid-range to compensate. Convergence, yeah, that works. And it's the same, so like if BitMEX is at $100 and Bitstamp is at like $110, you'll be paid to long on BitMEX, so the price of the future kind of converges upwards. I think that kind of explains it.
Yeah, that's. I think we gave it two sentences in technical roundup. Duck, what's your version of that?
I mean, it's basically just a way, like funding is basically just a way to get the prices as similar as possible, right? And yeah, I mean, everything else, like you're just giving people money to make that, so to keep like the prices similar, and yeah, and then everything else is handled by people that actually make use of that. By like, I mean, you can do it in multiple ways, right? There's people that arbitrage, that sell on one exchange, buy on the other, that kind of stuff. So it kind of balances itself out. But the crazy part is, and this is pretty much what Loom's been doing a lot with when you have BitMEX, for example, trading below spot prices, is that you actually have like a lot of people just selling on derivatives, like taking money that isn't theirs, selling Bitcoin with it. And those people are super at risk of just getting fucked by people that are smarter than them. Because it's really easy to squeeze people out like that. It's kind of what you've been doing, right? Loom.
Do you mean kind of like looking for open interest to kind of build up?
Yeah, just kind of see what people are at risk, because you can kind of see when you have like negative funding for a long time and there's nothing wrong with the market, because sometimes you have like, sometimes people know that there's something wrong, right? And then they short and kind of make the funding go negative, but price still dumps. But if there's nothing wrong really, you know that, okay, there's just a lot of people at risk of getting squeezed. And I think that's kind of what you've been doing. Like if you just kind of look away from, okay, it's just like a long when I'm getting paid to, but just like looking for those opportunities, right?
Yeah. And I think just like the fact that we get access to this information is like just amazing, because it's everyone's hand.
It's free as
Like,
well. You don't need to like pay for research
it's
or something.
ridiculous.
And now Skew, for example, has got like Bybit and BitMEX and a bunch of other exchanges. Yeah, the sophistication in the tools we have for derivatives and stuff is really something. Yet here I am, a complete moron, mostly just trading the price chart and then looking for funding and OI to cope if I'm offside. But that's another topic.
Oh, I love that. The more offside you are, the more outlandish you get.
Yeah, it's a classic thing, right? Like when you're offside, you start looking at things you never look at, and then you start including indicators that you've never used in the first place and weren't a reason for your trade. Like you short and you're offside instantly. You're like, okay, well now it's oversold now that it's gone up like $100 from my short entry. You know, I think we've all been there. One thing you mentioned with funding is obviously the basket, which comprises or how they come to a kind of spot price for Bitcoin. Now, I don't know if you've seen this recent lawsuit. I mean, there have been many, so that could mean anything. But it's another Mex one from a Russian bloke, right?
Oh no, is it the one with the infographic?
Yeah, it is.
Oh jeez.
Also, Liam, could you nuke your screen share real quick so we can just
Oh,
all
yeah.
look pretty and
Sorry.
pop up when we talk? Yeah, so the funny thing is, I think his name is Dmitry Dolgov, and Dolg in Russian means debt. So, I mean, maybe that's maybe that's relevant, maybe it isn't. But anyway, one of the arguments I think made, one of the allegations made in that suit was that BitMEX or some, entity was manipulating they take shorts on BitMEX, right? And then go to Stamp and whatever the least liquid or just whatever pairs at the time.
The least liquid regulated US exchanges. I
Sure.
think we should add that part.
Sure, yeah. Or just whatever, whichever index exchange was most, I suppose, vulnerable in their eyes. And so they'd get short on BitMEX, then go basically nuke spot where it was easiest to do so, and then make a profit, whatever, from their leverage positions. Sometime, I think in the past, I recall seeing some weird price action on Stamp, and it's no secret that a lot of the derivative platforms have kind of reorganized and recalculated how they come to a kind of what their index actually consists of, or how they calculate the spot price of Bitcoin. Do you have any kind of strong views on kind of theories on bashing spot exchanges to get desired results from derivatives? Do you think it's true at all?
I mean, the whole concept of like first you sell the futures, then you sell the spot is like, it's a pretty valid concept, and it makes the most sense in that, well, I mean, derivatives platforms are infinitely more liquid than spot,
Sure.
yet they follow spot. So it's not like a novel concept or anything. Like it makes sense and it's done. But I just think in the case of the lawsuit, it's just pretty hilarious in that why would they go to such huge risks on regulated KYC American exchanges where there's multiple kind of programs that look for this type of thing to eke like 1 or 2% out of the market? It's just so surreal. And then I think they alleged that Sam Reed was spreading fake news to make the price go down.
Yeah.
She's like, I don't think I've ever seen him tweet or say anything. That's just complete insanity.
I feel like most of this stuff is just people coping. You lose money trading and then you just need someone to be at fault. There's some truth to it, obviously, right? There's some shady shit going on, has been for years. But yeah, the way it's framed most of the time just seems like major coke to me.
I mean, the US legal system is very interesting because like I talked to some fund guys about this, and they just kept telling me, expect to get sued and stuff. Like it's really common because they're not looking for it to go through court or anything. They just want like a quick settlement. Like, oh geez, guys, go away. Here's like $1 million just to leave us alone.
All right, who are we suing,
like,
Doug?
And I think especially since BitMEX, obviously, like they've got enough legal troubles.
Sure.
They don't really want any more. They're like, these guys are easy prey.
Do you think there's, some people are smelling blood and throwing lawsuits their way?
Yeah, I mean, Arthur literally gave Seychelles an ambulance, so he would try to get away in that. The ambulance chasing.
What's your view on? Because we had to write. We wouldn't have to, but in technical roundup a couple of weeks ago, we had like the BitMEX news and then the FCA news, and I think I need to do a separate video on that because I've had the privilege of speaking to one of my gigabrain lawyer friends about the specific derivatives, crypto derivatives reg by the FCA, and it's actually a bit more kind of meaty and in depth than may first appear. So maybe we'll get him for a casual Friday or just to make a video having consulted with him, but. It created a scenario whereby you've got BitMEX, you've got FCA, and it almost seemed like a multi-jurisdictional coordinated effort to clamp down on crypto derivatives one way or another. A, do you think that's true? Or maybe B, what's your general view on the regulatory landscape, and does it matter at all?
On the first point, I don't think like it's... I mean, there's kind of global coordination between regulators to kind of get derivatives platforms to KYC and stuff. But I don't think there's any type of, I don't think the FCA crackdown had anything to do with BitMEX. And on the second point about it being like, is it bad for crypto? Or I think BitMEX made many mistakes that will not end well for them. But it's very much the US government versus BitMEX thing, as opposed to kind of like the first domino in a gigantic crypto crackdown.
Right.
Just because like BitMEX very clearly messed up. And like, I'm not hopeful for the exchange at all at current. But it's kind of like a social thing. Well, obviously everyone knows Arthur was quite colourful. Iconic, yeah, iconic. But the thing is, like, the CFTC doesn't want to mess around in court. Like, they're not a big division. It's not like some major organization or anything. So what they want is you go for the really audacious, outrageous guys as kind of like a warning for all the others, and then like you just settle with them. Because like I'm sure BitMEX and the CFTC were in talks for like months before this, and that, as in I'm also pretty sure that they're in talks with every other exchange that trades derivatives. But it was just like BitMEX went a bit too far, and so it was kind of like, well, we can't really settle as in like kind of you pay a fine, say you won't do anything like this again, and then add some actual KYC.
Do you have a turning point in your mind where for you it's like, okay, this is a bit too far? You kind of alluded to it a couple times, but is there anything specific, a specific action or maybe omission that for you was like, right, they're probably not going to be able to get away with a slap on the wrist with this going on?
I don't know personally, but I'm assuming that, like, you know how this stuff works, like you'll like the government will talk to BitMEX, they'll ask for documents and stuff, they'll be like back and forth. So I think this is definitely about their lax attitude towards Americans.
Right.
Like, I don't think it has anything to do with market manipulation or like their inside desk or anything. It's just entirely about how if you were American, you could trade on BitMEX, and the founders probably knew this and probably didn't care.
Yeah, jurisdiction. It mostly seems to be a kind of jurisdictional thing, with the exception of course, the Bank Secrecy Act charges against the executives, which are less, I mean, still kind of exchange oriented, but then I believe those are that's the criminal law portion of it, which of course is slightly more serious.
Yeah, that's what kind of makes me. I don't think BitMEX as a whole will like go down or anything, but it's not like looking good for the founders.
Do you think the kind of flight in open interest is permanent then, or just going to keep trending that way?
Oof, I couldn't say really. I mean, it depends entirely on what BitMEX does next.
Sure. Well, they listed Link, a Quanto.
Oh yeah, they were. BitMEX research is still going as well. They did some cool thing with brain wallets where they made wallets based off of like poems.
Oh yeah.
And then saw how quickly they'd get the funds taken.
It was like instant for some of them, right?
Yeah, just like a few minutes.
Insane. We've had a couple of requests now. I know this is something you've debated explicitly on Twitter, and it's about the DDoS, the BitMEX DDoS in March, when literally the exchange went down, and then Salsa came on, and Jules told us about all the opportunities that led to. But after the fact, there was some spirited discussion, to say the least, as to whether the nature of that shutdown. Was it deliberate? Was it manipulation? Was it an actual DDoS? Were we actually one liquidation cluster away from going to zero? You seem reasonably learned on the matter, or at least happy to discuss it, which are often two different things. Well, I'm going to give you the benefit of the doubt. Could you give some context?
What I will say is, BitMEX had infinite other ways to deal with the situation that did not include DDoSing their own exchange in a super risky kind of let's deny our customers the ability to trade at a super tense time. This will surely end well for us type deal. Like they probably could have cleared the books themselves if they wanted to for the upside, if they were being interactive as the DDoS people assume they were. But yeah, I can say they didn't. Like, it wasn't BitMEX that did it themselves.
It reminds me of this, because yeah, I mean, the thing is, it doesn't really, does it make a difference at that point? I think with so many derivatives traders just have funds on so many different exchanges, right? That as time goes on, I find it less and less plausible that like you were unable to trade at all anywhere during that. I mean, not to say it was a convenience for anyone. It certainly wasn't. Certainly for trading big positions during that time. But with, you know, we're kind of spoiled for choice, I feel, nowadays. And everyone talks about leverage, counterparty risk, etc., but then puts all their money on one exchange, which is always quite strange.
But no, I think the people who were moaning about it were people who had kind of been like just maybe shorting the whole way down and just like continuously adding as their P&L exploded.
Right.
But the way I think about it is like it was very out of the ordinary circumstances. And if you were in kind of like a position that was able to be destroyed by BitMEX being offline for a few minutes, then like you can't be too mad.
Sure. Is that something you, Don, by the way, just for those in the chat, Don says my mic nuked, I'll leave the rest to you. So that's just me and you now. We're on a date, Loom.
Ah, I can make a shisha thing out of this
Precisely.
can.
I want to ask you about, and there was a question about this earlier, for the Filecoin listing and trading, both on FTX, Huobi, I think it was Kraken as well, and we had some crazy price disparities and price bands on FTX, which confused some people, and just a whole lot of, I mean, you know, 100% up, 100% down, completely crazy. So for some that might be unaware of maybe Filecoin, its history, where it comes from, because it was kind of a meme when I joined in 2017, right? Of kind of Filecoin, and then it went nowhere, and now suddenly I'm sure some people are caught off guard.
Filecoin is just amazingly bizarre. I don't think anyone really cares much about the project. It's just the fact that a few months ago there was this huge Chinese craze for Filecoin miners.
Right.
It's the complete weirdest thing. Like, I think literally billions put into just mining Filecoin. Like some kind of like the new Plus token, like just complete Ponzi scheme that doesn't make much sense.
Sure.
And then I don't know when it was, but it was announced maybe recently or so that to actually activate the Filecoin miners, you need to pledge some Filecoin itself.
Oh, I see. Okay.
So suddenly out of nowhere, there's this huge demand for spot Filecoin. But the thing is, everyone's Filecoin's freaking vested. Like, they get it in 6 months or in a year.
Oh, I see. Okay.
So you have a market where there's just infinite spot demand from just thousands of these members of the East who are like, we need Filecoin, and it doesn't really matter what we pay for it, since it's like a bit to kind of pledge their miners. And then you have these, well, the Filecoin ICO investors who are like, okay, I get these coins in 6 months and it's currently made me a billionaire, so I need to hedge this like immediately.
Mm-hmm.
And then that gigantic disparity kind of produces insane funding rates and just huge discrepancies in the price between the spot and the futures. And when that happens, it's just hell, basically. Because I'm sure many people hedged off their Filecoin at $40. Like, wow, I just made 5x my ICO investment. But since they didn't have any Filecoin to kind of support their short, if the price of Filecoin doubles, their money gets liquidated.
Mm-hmm.
And suddenly they don't have a hedge anymore. So some are hesitant to sell. Some don't really understand maths and like, sweet, I just made 10x. I'm going to short it all here and then collect it. And then they get destroyed by funding. So it's just a complete like mess.
I feel like
But
some
very
of
raw
the
crypto.
listings, I don't know, because I do want to ask you about DeFi generally, right? Because there was a day on or a period of time when you couldn't go on Twitter without reading about the next, everything aping Uniswap, gas fees, and that whole side of things. And then ETH nuked, right? And then a lot of the DeFi stuff nuked, and Andre with YFI and EMN
Oh,
and
jeez.
all sorts of, the narrative just got a bit murky, and now it's in a bit of a weird spot where there's still some shilling, I suppose, going on. We had a small little mini bubble via NFTs, right? And then now it seems, I don't really know. John, what's your view on where we are in that kind of Ethereum-led environment or ecosystem?
Whenever we get something good in crypto, you always get the apes who kind of like push it too far upwards, and then it's like a yo-yo. It goes too far up, so it goes too far down.
Mm-hmm.
But I mean, the whole it was pretty unsustainable in that most of the yield that DeFi generated was from kind of farming other tokens which needed buyers. And so eventually the buyers ran out, and then it's like, well, we aren't getting our 10,000% a year anymore. But I think for DeFi as like a kind of holistic idea, I think I'll permanently be bullish on it, in that it's just decentralized BitMEX. Apart from, instead of BitMEX getting the fees, you get the fees, which is like in this new paradigm where everyone's a trader.
Sure.
It just seems like a genius idea. But the thing is, I don't think there's anything that even like closely kind of resembles that yet.
So are we past the first? Has the kind of short-term first bubble popped, if there is such a thing? Are you kind of short-term bearish in terms of price, but maybe longer-term? Because I think the assumption will get a lot of people wrecked. Not in bubbles, but just generally any really speculative episodes, is that there's an assumption that as infrastructure and innovation increases, that price increases linearly as well, and they kind of just go one in one. Whereas obviously there comes a time when there's a huge detachment between the two. And that doesn't mean that, for example, dot-com bubble, therefore all kind of e-commerce and the internet and tech stocks are therefore rubbish because everything crashed. It just means that there's ends up being a big gap between value and price. Do you think that applies to DeFi to some extent? Whereby we're maybe more sophisticated and more interest and more awareness than we have had for a while, but purely from again, not that's the word I like, but sustainability point of view, where maybe over the first obstacle and have some more time and building to do before we go back to the price action we saw on ETH's run up. Do you subscribe to that kind of theory generally?
I'd agree to that, yeah. I mean, the thing is, like, nothing is ever priced in.
Mm-hmm.
So yeah, I think the whole kind of, when we had YFI clones going up like 50x, that was a bit far from reality. But no. The issue is, since it's such a quickly changing scene, like YFI didn't exist 3 or 4 months ago, that it can be undervalued and overvalued in like the same day.
That's true.
Insanity.
You had you noted an opinion on the whole I test in prod debacle.
Just Andre's either like a complete evil sociopath, or just he has he's just severely lacks all social ability just to like understand anything. In my unbiased opinion.
In my humble view.
These aren't the views of Technical Roundup.
That's true. But for those who may be unaware, I suppose the brief history would be Andre, kind of the poster child for YFI developer, or, you think YFI, you think Andre, right? It goes up a lot, even though he says it's supposed to be worth 0. And then I think EMN came next, which is another kind of test contract, but it was deployed via Yearn, which is also associated, kind of his thing, or
he
associated with him.
He was retweeting shield posts for it, like teasers and stuff.
So there's another token or another contract, right? And he starts retweeting, and it's deployed via Yearn, etc. People FOMO in, and it doesn't get rug pulled, but it just gets exploited. I think it's the curve. Is it the bonding curve? It's called. Not my area of expertise.
So it was basically like a flash loan thing where someone borrowed. A flash loan is where you borrow and pay back in like the same transaction.
Mm-hmm.
So someone borrowed some money to buy EMN, and then I think they sold something that kind of made their account seem more valuable,
Right.
so they could buy more EMN from the curve, and then obviously they've paid back the loan, but they've got more money, so they
Sure.
can just kind of nuke it.
Print.
I'm not a DeFi dev.
Yeah, no. So I mean, that's kind of the arc, right? YFI, big good Andre Hero, then starts kind of retweeting and deploying this new contract via Yearn associated with him, and arguably shills it. People FOMO in because YFI went up so much. This is his next thing. Get in early. That gets rinsed, and then there was a recent one as well. I forget the name, but it wasn't a
LBI.
Yeah, something like that. And it was a very similar story of kind of Andre associated project, rapidly appreciates and then goes the other way, right?
Yeah, he said I'll post about my next full-on legit project on Medium,
Mm-hmm.
like a few weeks-ish ago after the whole EMN debacle. And then he posts about this one on Medium.
Right.
So it's just, yeah.
So
And
your
then
view
he
is
did
that
make an
it's-
update, but it was like an hour afterwards.
Yeah, the bold text at the top of the Medium article, right? I find it very strange that crypto, of all places, I don't know if you agree with this or not, but we tend to love kind of cults of personality, or at the very least, they're very powerful in work in crypto, be it devs or executives, founders, whatever it may be, for an ecosystem which puts a lot of weight on decentralization and sovereignty and all that type of stuff. The amount of literal personality cults that float around the space is quite, I think at times hard to reconcile with those underlying messages. I mean my personal explanation would be people just see those front men as a means to appreciating prices, right? Like they've got like a spearhead and someone to lead the charge and to make number go up, so therefore it's justified. But I don't know if you've ever thought similarly with regard to how much we tend to circle and ensnare around single people.
I think people love memes and stuff with like single big founders are like very easy to meme.
Sure.
Sorry, I'm just closing some of my SPX short.
Let me just bring up a chart real quick so you can see where Lumi's getting out. So here we are. Loom bought / sold the top, and he's cutting some out here at 34.80s.
So, yeah, memes are very, very powerful. And I think it's like Chainlink.
Mm-hmm.
It's just it creates, not only is it just like, it's good kind of social stuff to have all these memes out there, but people start unironically like believing in the people.
Sure.
And then, like you said, it becomes kind of cultish where these people just like refuse to sell.
Have you ever fallen victim to any of that? What's your cult altcoin, or the closest thing? Shift?
Yeah.
I think for me, I think generally with people's kind of altcoins history, altcoins which stay in their mind are always the ones that have the greatest impact on their net worth, up or down. That's pretty. I can't think of anyone who has like a really memorable experience of an altcoin, or they're a believer, or have really strong views, and it's just based purely on the fundamentals. It tends to be either for expected returns or how it affected them, like in an alt cycle. Either they lost everything or made everything on it.
Sorry, I was phone call.
No, that's all right. I was just saying how for altcoins, most people, the analysis bit and the attachment tend to be kind of financially informed versus, this is the future or the tech, etc., etc. Sometimes they're related, but not really.
Yeah, I think especially kind of like in crypto where stuff changes quite fast.
Yeah.
People tend to show their book. And, like, this is the next big thing. This is like the next big thing in their wallet.
We also, we always try to ask guests this, but like with altcoin cycles, for just as practical example for technical roundup, for a lot of the altcoins, we just do the Bitcoin pairs, right? So like Litecoin, Bitcoin, Ethereum, Bitcoin, EOS, Ripple, Bitcoin, etc. And there's been a notable shift just in terms of volume, interest, etc. It's just people just prefer using and trading with and against stablecoins, and just even for kind of margin, just using linear, at least for altcoin trading, linear futures and straight up stablecoin collateral for trading altcoins. And as a result, just there's been a kind of exodus from alt BTC pairs because it's just one less thing to worry about. All the new listings during the DeFi craze were altcoin pairs, nothing to do with Bitcoin, etc. So do you agree that such a transition has taken place with regard to stablecoin dominant altcoin trading versus Bitcoin? And if so, do you think it's good? Do you think it's bad? Or maybe why has it happened? Just any exposition on that topic. I'll ask every single guest this. I find it so interesting.
I think for the derivatives guys, it's much easier for you to list something against USDT.
Sure.
Just because you can use USDT as like a unilateral collateral, and as crypto is kind of more professionalized, people feel safer having USDT as collateral, just because you can then kind of like generate a Bitcoin long if you wanted to by just longing Bitcoin with that USDT.
Mm-hmm.
But I think this is probably a direct result of March 13.
You think so?
Yeah, at least in some part. And also just some funds, like I guess it's very hit and miss, but some funds can't have BTC as trading collateral.
Mm-hmm.
Like it needs to be something USD synced.
So sometimes maybe necessity as opposed to choice.
And there's not really much downside to listing a USDT pair.
Yeah.
Apart from you get the Twitter post about how you're leading the Tether fake volume pondering.
Sure. What would need to happen for alt BTC pairs to become kind of mainstream again? Do you think this is just like a paradigm shift where it's just easier collateral, easy to play around with, feels safer and more professional, just less to worry about?
I think it's a paradigm shift in that before stablecoins just weren't big enough.
Mm-hmm.
But now, like, freaking Tether's almost a $20 billion market cap.
Sure.
Stuff's just like the right size, where it makes sense for people to trade against stablecoins now. But I think that's also kind of like my thesis I had on like why no one had spot Bitcoin to sell anymore. Like the other half of that was just how there was like so many people in stablecoins where there wasn't a really like a big nuke it and squeeze everyone scenario.
Mm-hmm.
Just in the like all these stablecoin people can just buy some Bitcoin and kind of like support it. It's not like 2019 where the freaking run up was just longs leveraging longs.
Longer longs. I always thought I totally, it's hard to disagree with the argument about the size and proliferation of stablecoins being a leading factor in that. Do you think it's also true to say that like when Bitcoin is just leading everything and going crazy, and that's you kind of use that as your index, and so when you're trading altcoins against Bitcoin, it was viewed as a means to accumulate more Bitcoin within the trading pair? That kind of narrative always existed, right? Do you give that any weight at all, that now that maybe we don't see that as, or certainly after March, or just this most recent or these most recent legs being ETH driven, there's just no real incentive for a lot of people to stack Bitcoin, be it via, well, certainly not via altcoin Bitcoin pairs, with all the benefits that stablecoins offer?
No, I agree with that. I think those are dated concepts that like anyone apart from people who directly benefited from it are just like kind of moved off of. Like the whole when's the last time you looked at your balance in Bitcoin?
Yeah.
I genuinely can't remember.
Is my microphone working again?
Yes, it is.
Oh, we can hear you.
Yes.
How rude of you to interrupt. Listen, we're in the middle of something, okay?
You
can wait for your week to come on.
But yeah, I think I've got something to say about that.
Oh, please.
Because
you
like
spent a long time thinking about it, Doug, so I mean...
yeah, for me, I don't know, like when I trade altcoins, I don't really like I'm depressed when I underperform Bitcoin. So for me, like the Altcoin Bitcoin pair is still the most important one, just because like you're taking on so much more risk when you're trading an altcoin over like Bitcoin, that it just makes no sense, even if it's like a leverage long, to kind of take that risk and then underperform Bitcoin, right? I mean, you're obviously still going to be happy, right, when you long like an altcoin and it goes up 10%, but I mean, it's a bad trade when Bitcoin goes up 50% in the same time, in my opinion. Because like the risk is much greater, right? You're running the risk of like a rug pull in DeFi, for example. You're running the risk of like a dev just randomly dumping their stuff. So I don't know. I feel like the reward has to kind of be, okay, I'm massively outperforming Bitcoin. But that's just my personal opinion. A lot of people disagree, I think.
I think it makes sense, right? The argument essentially being, it's an extra step or perhaps an extra risk or liability to buy an altcoin. So the very least you can expect in order to be incentivized to do so, or the bare minimum standard it should meet, is outperform just holding your Bitcoin, which everyone kind of does anyway. Is that a fair summary of?
Yeah.
Okay.
And I mean, the thing is, like, you wouldn't want to buy altcoins when you think the Bitcoin collapse is coming, right?
Sure.
Because I mean, if Bitcoin collapses, you're gonna be shit out of luck sitting in an altcoin, no matter what happens. I mean, we've kind of had that happen once before, or like in 18, where Bitcoin started collapsing and altcoins actually managed to outperform it for a while. But that rubber bands relatively quickly. So, I mean, there's only like so many times where you can actually buy an altcoin where Bitcoin's bullish, the altcoin is bullish. And I mean, if that happens, you're making big amounts of money, but it's just very rare.
Yeah, I was just reading some of the comments. Pumpkin Biscotti says, I think with new derivative platforms that are USD centric makes the whole Bitcoin pair obsolete. I think as time goes on, it becomes harder to necessarily disagree with that point. I think overall it's not a bad thing that people are actually considering the USD value of just their trading, their portfolio, etc. I certainly know there's like a generation of BitMEX traders who will like bet and lose and make a lot of money because it's all denominated in Bitcoin, right? You're trading Bitcoin to make more Bitcoin, and you're all within that base currency. You kind of lose track of the real life portfolio kind of implications of that. Not to mention the contract is built, inverse futures in that form are built kind of very bullishly. Whereas if you're bullish and the market's getting wrecked, you get like doubly wrecked, right? There's obviously a financial term for that, which I seem to forget. It might be convexity, it might not be. But I think there's a lot of kind of calculations in the background which you kind of end up ignoring if you only trade within Bitcoin, and the kind of USD pairing brings us all back to earth a little bit. Do you agree with that at all? I mean, I remember when everyone went crazy, exaggerating slightly, of course, when that Google Chrome script came out, which showed you BitMEX in USD. Do you remember that? And then everyone just kind of overlaid it. I was like, oh my...
scared me so much. It's like, this script that interacts with my BitMEX. Yeah. I don't think I'm going to install it.
Yeah, same.
I'm good.
Yeah. Like, no matter who vouched for it, I just didn't want to touch it. But yeah, I mean, I fully agree with that. It's happened to I think pretty much anyone in the space where you're like, oh, it's just like, it obviously depends on your portfolio size, right? But it's just 0.1 Bitcoin. It's just 1 Bitcoin. It's just whatever, right? And then when you think about it in like real life money terms, you're like, holy shit. I just, like, in that like 5 minutes, I just lost the average wage of the person, for example. Shit happens, right? And you kind of forget that. You kind of forget you get a disconnect, for sure, 100% between like the real life and what you're doing online. But I think that happens anyway. Like,
it does,
the longer you trade, you kind of lose that connection. And then when it comes back, you're like, holy shit, this is insane.
Loom, I always like to give very practical takeaways for our audience who's always kind enough to join us, hit the like button, etc. We love those people. But one question which I never have a fantastic answer to is about taking profits from trading into just kind of life generally. Like we can talk about collateral and USDT and being tethered, hedged, and how you calculate X, Y, Z. But in terms of, your job as a trader and then paying yourself from that, I'm not asking for tax advice, obviously, but at least in your mind, or how would you suggest even a basic framework for someone essentially trading crypto for a living and then asking, how much do I pay myself? When do I pay myself? What currency do I pay myself in? Would you be comfortable kind of maybe giving some tips or personal experience with regard to approaching that somewhat diligently?
Well, I mean, I would say US dollar is king and just keep everything you have, like kind of you want to keep safe in US dollar, but I don't think I'd be too popular right now.
Hey, I mean, if that's your view, it's your view.
But it's just kind of, it's very, like every person's different, but just don't be silly is like, try, if a friend told you they were going to do what you want to do, would you tell them to do it or not do it? Kind of look at it from an outside perspective. And I guess this applies to like dangerous trades and stuff as well. And kind of try and get like an outside look on it and be like, is this rational? For like example, if you wanted to buy a boat or something.
I mean, honestly, like I think that's really good advice. And I've talked with a friend about this before. And that friend said what helped him a lot was just talking with other people about like even like finding someone that you're comfortable with sharing like everything and then just talking about, okay, I'm taking this trade with this position size, with this kind of risk. And then he said like he noticed that he was ashamed of some trades that he was taking and those ended up really sucking, like over risking, doing a lot of shit that he shouldn't be doing. So he kind of learned by having to share his stuff with someone. And I think that's actually a good way to go about it. Like just find someone that you can actually talk about this stuff with.
Yeah.
Yeah, 100%. Like if you're embarrassed to share a trade, it means you subconsciously know that like it's just not the smart thing to do.
Yeah.
And it's like a lot of the stuff I do is like I'll just monitor new traders and see what they're doing and stuff, because it's very, very, very easy to see mistakes in others that you are doing yourself, but like you don't know you're doing yourself, because like your brain is very bad at judging yourself.
Yeah.
But trading is not like this infinite thing. There's only so many kind of like clear mistakes you can do. So if you were to spot that in someone else, you can kind of be like, actually, like he's made that mistake or she has made that mistake a few times. And then you can kind of bring it back to yourself and be like, have I ever made that mistake?
Oh, for sure. I think that's kind of what Twitter was. Before Twitter goes to hell / just dopamine, addiction, I think one of the main conceptual or theoretical selling points was to keep yourself accountable by having like a public ledger of your trades / ideas that you interact, that you share with other people, with your peers. You go back and forth, and just to have that as an account, it's just like an accountability tool, right? Obviously, it very rarely stays that way, especially as things change. But I think the logic is there overall.
I mean, we have like one big case study of like a transparent trader, and that's Jules.
Yeah.
And like no one can say he hasn't performed well recently.
Yeah.
I thought you were going to say crypto broken, but yes, Jules.
Oh, don't do it, man. That guy suffered enough. Oh, jeez. I think he flipped bullet like 12k before the 6k dump.
Man.
Ah, bless him.
The thing is, it's a difficult thing to balance, right? Because trading isn't a team sport, in my view, and no one can
Trading's
actually.
evil. You literally take money from people. Like, there's nothing more. Just.
Yeah, I mean, and no one can actually sit there and execute for you and do your sizing for you and manage the trade for you, and etc. But I think as an accountability tool, having like a group of friends or even just one friend or some sort of something external that will keep you honest, either by internal moderation that you know that if you're putting out crap and you feel crap about it, that tells you something, or externally if someone's there to tell you that, hey, this isn't how you typically trade. I think that's useful. Mr. Artless says, my biggest problem is listening to CT, no joke. If I have a strong read but other good traders think opposite of me, often reverse, even if I was right. I think the answer there is just delete Twitter. Because it sounds like it's doing more harm than good. I don't know if you guys agree.
That sounds like kind of maybe like a you problem, and that you need to hold conviction, maybe. Like one time, don't listen to, well, the thing is, when people say they're like, CT was bullish, I was bearish, and like, it's usually the people that they want to blame the bad trade on that isn't themselves appear in their brain, and they're like, these guys were the reason I lost that trade, and they ignore all the guys who are on the other side who were like, maybe this isn't bullish, this is bearish, because like you can't blame them for you losing money.
Yeah, I've seen a lot of people also when they flip-flop, right? So when you have like start a position, you're like, oh shit, this looks bad now, and then they kind of do the opposite, and then they flip again or whatever. And then it's often the case that they're like, oh shit, this idea was such a good one, I should have just stuck with it. And of any of those that they flip-flopped, right? So they have like 4 ideas at the same time. And then they obviously lose money and look back at it now like, oh shit, I should have just done this. But the thing is, like, when you kind of do like a lot of things at once, or like have a lot of info at once, like it's obvious that one of those is gonna be right? And it's not really helping you to kind of go about it that way. You just have to pick one thing that you think is gonna, like, when you take a trade, for example, you take the trade and then you have clear invalidation, okay, this is why I want to get out early, for example. And then, because if you don't have clear invalidation and you just flip-flop around, you never know like what went wrong in the end. Because obviously one of the ideas that you had is going to be right, but that doesn't really help you, because you like the way you got to that idea is just a weird way of just throwing out ideas in general. So sometimes it's actually better to just have something, like have an idea, have conviction in something, and then follow it through. And if it's wrong, you maybe know like what to work on, or okay, this is something that I shouldn't be doing, instead of having like a bunch of stuff and then not really having like any way to improve on that. Or
it's fewer variables, right? You've got less things to look to fix, or sorry, bad English, fewer things to look to fix. If you don't just kind of populate, I followed this person, but then one of my counter traders came up, but then I got a gut feeling, and then this guy tweeted never below 10k again. It's like, hold on, what's your actual trade idea? And how do you then go back and reassess that? If you can't, then trouble in paradise. Everyone keeps saying that Amazon's just rug pulled, so I'm just gonna. This is where Loom closed. Oh, Loomy.
Oh shit,
Loomy.
I closed some.
Oh, you closed some. Okay. Yeah, that's a. That's a candle on Amazon.
That's a nice one, yeah.
Did Charles ETH get arrested? Crypto Charles get arrested? Is that what that candle is? From his Amazon arbitrage, whatever business.
It pulled the whole SPX down like 1%.
Of course it did, yeah.
Yeah.
That's not bad. What's the range on that hourly bar so far? Yeah, 4%, not bad.
And then obviously that led to Bitcoin pulling down as well. Fucking hate that stuff.
Oh yeah, I don't know what this is doing here. We can hide.
Like when you have the markets correlated, like heavily correlated, and I know Loomdart's gonna be like, but like for me, when I have like a lot of correlation between, for example, Bitcoin and the SPX, it's really hard to kind of use the normal way you trade Bitcoin.
Oh yeah, I'm with you. I actually longed 11,350.
Oh really? No, but for me, it's like this. I don't have as much of an edge in the traditional markets as I have in crypto. So when you have like the correlation go up, it's actually getting harder to trade. As long as there's some levels on the SPX or like in the traditional markets where you kind of know what to do. Like you're expecting a bounce at this and this level, but if it's nowhere close, it's actually pretty hard to trade Bitcoin in those kind of in this situation where you have this correlation going on. So I'm not really a big fan of us just mirroring the SPX.
See, that's just a bad attitude, Duck. Instead of saying I'm a crypto trader with no relevant SPX experience, therefore my alpha's eroded, you should just beat your chest and say, now I'm going to be a great crypto trader and a great SPX trader because I've got no other choice.
I mean,
it's annoying in the short term.
Yeah.
Like, this is just...
they
should have done this on Monday.
You made an interesting post, actually, about... Go on,
Come again?
Sorry, I interrupted. Go on.
I had a pretty good read on the market before, like on the SPX market before, during the COVID thing, where I was like, okay, this is probably going to wipe out pretty hard. But I never expected it to like scam pump as hard as it did. So yeah, I mean, I guess for the SPX, it's just a matter of just expect it to pump forever. And I mean, I kind of agree with Loomdart. I mean, it's designed to go up forever, right? So
yeah. But then you said one thing which was kind of legacy market gatekeeping, and how one shouldn't be afraid to get, as a crypto trader.
Yeah. They lay you on with just absolute bullshit about like, yeah, you're a crypto trader, stay in your lane.
Right.
These are like the big boy stuff. It's just markets consist of people buying and selling. The more people buying and selling, it's like the more kind of basic the market becomes. And maybe Forex is hard to trade because, well, there's so many banks and like actual kind of just money lending and stuff happening in Forex. But with stocks, like you're trading with the entire like American kind of just people. Like you're trading against people. There's nothing inherently hard to understand about it. And so I think all this kind of gatekeeping about how like, no, you need to fully understand the fundamentals and the yada yada to trade is just kind of cope. It's a way of basically keeping people outside of trading stocks themselves and then getting you to instead pay like a 3% a year maintenance fee to some fund
that I agree with,
that underperforms the SPX. But like, there was this one guy, he was ranting on about how like stock market trading had been taken over by retail and stuff, and this guy's fund was, I think, down like 8% this year when the SPX is up like 15.
Yeah, I mean, what I've heard a lot is when you have like these portfolio managers, whatever, talk about the markets, and they're like, yeah, we've kept our, like, we haven't underperformed or overperformed the SPX. We've just been like
we've performed
pretty close to it. Yeah, we've performed pretty much, but our risk is way smaller, right? Like that's what they always say. Like, oh, we just underperformed by a tiny bit, but our risk, like if the market collapses, is way smaller. And then the market collapses and they're completely fucked, right? I mean, if you think about like what happened in February, in March, where you had a lot of stuff just blow up. And then like they underperform during times where it goes up. And then they underperform also during times when it goes down. So I totally agree that there's a lot of scammy stuff going on there, where it's like no one actually has an idea where the market is going 100%. Like you can always just guess. And oftentimes, like for example, for the traditional markets, oftentimes just, you bet on it going up and then you actually outperform the professionals. And I mean, for Bitcoin, it's probably the same thing if you think about it, like most of the time. Like,
I mean, it was a huge thing in like 2018 where you'd invest in crypto funds. And like, I mean, the fact we even had crypto funds, like no one knew what the hell was going on anywhere. But these guys were like, no, yeah, take our money. We can underperform Bitcoin for you.
Did they use
drastically
Bitcoin
underperform Bitcoin?
as an index?
I mean, they all had altcoins, right? They all had altcoins in the crypto funds. All
yeah,
had
you got to
altcoins
diversify. You know?
Yeah, and then like they have like a massive amount of altcoins sitting there. Ah, geez, yeah, I remember that. Most of them aren't around anymore, are they?
I'd agree with that. Yeah, apart from Polychain. who returned $20 billion to investors thanks to their Filecoin investment that they've marked at like $200.
Damn.
Oh.
That was a joke, by the way, in case they're trying to sue me.
I was like, have they really?
Yeah, I was
don't
like,
even know.
I probably would have read that somewhere, but yeah. I don't know. I think it can't be too surprising that if you get like legacy underperforming like the S&P, that then in another market, funds here kind of underperforming Bitcoin in many cases. And there's also tends to be a kind of selective cope. Like when you talk to some of these people, it's like, oh, so what do you aim to, how do you benchmark, right? That's the correct term, I think. Like, what's your
benchmarking? Here we go.
Right? It's like, what's your benchmark? It's like, well, at sometimes try to outperform BTC, and then other times kind of just try to grow USD. And it tends to be the most convenient points in the cycle when they're trying to do one or the other, which is always very interesting. I don't know if you've noticed something similar.
Yeah, I mean, it's just the good way. The thing is, like, if you know how to talk about this stuff, yeah, I mean, like, it's easy to frame, like, especially in crypto, it's easy to frame stuff the way you want it to. And I mean, I think that's why we have so many Twitter experts as well. Just because if you're like, okay, I want to outperform Bitcoin, it's one thing, and then you can say I want to outperform USD, but then you can also say I want to outperform ETH, or I want to do this and that, or this is just a hedge.
You just make a basket or something.
Yeah, it's just like that's why I tend to try, like, in general, I only take people serious that actually say something when they say something. And I mean, it takes a while until you kind of get that. But yeah, on Twitter, for example, sometimes you see stuff where you're like, okay, but when I read that again, is there actually anything in there? Or is it just like nice marketing bullshit? And yeah, I think like on Twitter, that's true for the traditional markets as well. There's oftentimes just no substance in it, just weird stuff that sounds smart.
I think plausible deniability is a big ingredient in that no, you craft your tweets such that you can go back almost at any point in the future and find a way to make it fit the curve, which is obviously a kind of absurd exercise. But I agree and I've been guilty of that myself. I'm not going to sit here and pretend I haven't used.
Yeah, probably everyone.
Of course, yeah. It's just something that ideally shouldn't be happening. Well, look, Lumi, do you have any final either points, comments, concerns, something to leave our audience with, a practical takeaway? You've been incredibly generous with your time. Any imparting wisdom? Or parting wisdom in this case?
If someone says something about your trading sucks, first look at it holistically before you cuss them out, because maybe they are just trying to help. There we go.
Surprisingly good faith.
Yeah, wholesome.
What about you, Doug?
Oh, I mean, I enjoyed this. Thanks for coming by, Loom.
Oh, thanks for having me.
I hope you enjoyed your nap in the middle of it, Doug, as well.
I was trying to fix my microphone the entire time.
I think two final thank yous are owed. One is to Bybit for sponsoring Technical Roundup. Thank you very much. Their links are in the description below, especially the newsletter, of which they are the sponsor. That comes out every Tuesday. Would love to have you guys read that if you're not the listening type. And of course, to Loomdart, our first recurring guest. That's a title no one can ever take from you, so one to put up on the fridge. And to our audience, thank you for smashing all the relevant like, subscribe, engagement, algorithm boosting buttons. We're very grateful. And the next segment will be me on Monday. And just as a final thing to reach out to the audience, if you want me to bring on a lawyer friend of mine to talk about the FCA regulations with regard to crypto derivatives and give an actual informed view, let me know, and I'm sure I can ask him to find some time and we can go have a chat about the regulatory landscape. But that's all we've got for now. Thank you very much, gentlemen. Thank you for your time. And to the audience, Loomdart, have a fantastic evening. Doug, get to sleep at some point before 6 a.m. And for everyone else, we'll see you on Monday. Take care.
Bye-bye.